Well, foreign buyers buying lots of South African property. About 6.5 billion rands worth of properties in South Africa changed hands, and surprisingly, not just in the Western Cape or Gauteng, but also in provinces like the Eastern Cape and KwaZulu-Natal. What's even more surprising is that Nigerians are being listed amongst the top foreign buyers in this country. I'm Bruce Whitfield, this is Tonight, and we're looking at the allure of the South African property market. I'm joined by John Loos, who's the household and property sector strategist at FNB, and Herschel Jawitz, the chief executive of Jawitz Properties. I mean, it's a long time since I've seen you wearing a talking up property hat, John Loos. Have we finally turned this property corner?
Bruce, well, where have you been? I've been sketching quite a good picture for a few years now. But look, it's certainly not a boom time market, but we're pretty solid markets, well balanced. And when it comes to foreign buying, what we have seen in our estate agent surveys over the past year or two is a gradual uptick in the percentage of buyers that are estimated to be foreign buyers by our agents. So that has improved somewhat. Very much linked, while some people may point to rand weakness, providing discounts, I'm skeptical as to say that's the main driver. It tends to correlate more, I find, with the popularity of property as an asset class globally. And what we've seen in the Knight Frank Index, for instance, is an uptick, an improvement in their global house price index.
But you look at what's happening in London, for example. I mean, London property has gone mad. Every Russian who could get money out of Russia before Vladimir Putin sort of meddling in Ukraine seems to have taken their money and put it in London property. People are talking about a bubble in London property, and London's often a barometer for global property sentiment. Are we not being artificially inflated?
Well, I think we are being I'm not sure if we've been artificially inflated or if global prices and local property prices have been kept artificially high. In other words, the bubble never quite deflated from a few years ago. Kept artificially high by, not so much by a frenzy of speculative buying or anything. If you look at the markets, they look pretty rational, but prices kept artificially high by artificially or huge stimulus measures. I mean, we've had 0% policy rates in the United States. I mean,
and interest rates in South Africa for the last 5 years, Herschel, they've started taking up January 50 basis points, another 25 basis points recently by the Reserve Bank. Interest rates, haven't been this low, haven't been this attractive for an awfully long time. We haven't seen a mid-2000s style boom, but we certainly haven't seen a collapse in the property market either, as one estate agent forecast in 2008 would happen, Mr. Geffen.
Absolutely, and I think as you pointed out, by South African standards, anytime interest rates prime rate is in single digits, it's at very low levels. And I think what's also working in favour of property prices is the imbalances, especially in the metro markets in terms of supply and demand. There are very few buyers sitting on the fence. I mean, most buyers are in the market. They realize we're in a rising interest rate environment. Property prices are moving upwards, even at slowish rates. And so we've got a lot of pent-up buying demand that's back in the market and a critical shortage of stock. And that's why I would expect at the end of the year that we're going to see significantly better than expected property price growth, especially in your major metro areas in excess of 10% potential.
You look, your numbers tell you on average across the country from Sosie's Vlei all the way, that's in Namibia, but from Sunny's Hof to Sandton, on average we're seeing 8% increases so far.
Around about 7.8% is our latest index. I differ a bit from Herschel. I'm a bit more bearish on, I think there'll be some sort of gradual slowing down in the price growth for the simple reason we've got an economy that's not going places fast. And I think that the gradual rise in interest rates has to just cool people's expectations or aspirations somewhat. I don't sketch a bad picture though, unless the bottom really falls out of the economy, but I think mild slowdown in house price growth.
I picked up a copy of a magazine, CEEF publish a quarterly magazine, and it says, where have all the buyers come from? It was an April edition, I think, and talking about this phenomenon of foreign buyers, Herschel. Is it something that you guys have noticed as well, foreign interest?
Absolutely. So, and I think specifically, not so much the leisure buying, which is the expectation, as you say, weak exchange rate. So suddenly, by global standards, buying an apartment in Bantry Bay becomes very attractive. But we're definitely seeing a trend in your inland cities like Johannesburg, for example, and perhaps the not so glamorous coastal areas where we're seeing a lot more foreign buyers, and specifically from Africa. So I think a lot of potential African buyers see South Africa as their currency hedge in the same way as many South Africans see rand or dollar, dollar or UK investors.
And the same way as the Russians see London property markets attractive,
absolutely.
Nigerians might regard Johannesburg and Cape Town as attractive destinations.
Absolutely, and in fact, we're not only Nigeria, but what we're seeing a lot of is buying coming from, and especially at the upper end of the market, from your resource countries. So Angola, Congo, Ghana. So a lot of your resource-based countries where there is wealth being created, a lot of that money is coming into the residential market in South Africa.
Somebody's got to be buying the 20 million rand plus properties. I don't know who is buying them. Is it those guys?
Absolutely, and specifically, I know you mentioned sort of outside of Johannesburg, but if we look at some of our buyers who bought specifically through us, but I assume it's very similar with most other brands, in excess of the 20 million, a lot of them from Africa and a lot of them from those resource-based economies. No doubt about it, it's becoming a trend.
And when we look, I got a nice email from Mwangi Gitahu, who tells us that 3 house sales in Bantry Bay over 18 months resulted in 176.65 million rand changing hands. That's what, 13 million rand per property. That Atlantic seaboard has never heard of Newton's law, it would seem, John Loos.
Crazy, and I can't understand why people want to live on a slope like that. I'd rather live over the hill at Bishop's Court or somewhere like that if I was
Wouldn't we all?
in that league. but yeah, no, that market is just not really. It's almost not part of South Africa anymore. It's just it's globalized. It's driven by global patterns and.
Is that a fair comment?
Absolutely. So, and I think also it's purely simply supply and demand. So that, there are only so many
houses you can build on a cliff.
Cliff. And so those prices are, sea views and mountain views dictate a premium to the market. So I do agree. I mean, some people in South Africa talk about Cape Town being a world apart from what goes on in the rest of the country, and I think that residential market reflects some of those trends.
It's about investment and it's about return on investment. If we're getting returns this year, call it 8%, Captain Conservative, or call it 10 from Herschel, who's the estate agent. Can we average out at 9? 9% return this year is going to be a pretty good return. It's beating inflation, and that's pretty solid. I mean, in terms of historical figures, how good a return is that?
Yeah, I guess I would guess over the long term, the last 40 or 50 years since we've had a house price index in this country, you'd probably find property values over time just really keep up with inflation on average.
Why are we beating inflation now then?
It's, building activity, okay. The Western Seaboard, as you pointed out, there's just no more space. But in the normal residential markets, there is space. I guess what we have had is a lack of new infrastructure expansion around our cities for years, and that may be a longer term issue to deal with. But building activity has never really recovered in a big way since the end of the boom. It peaked in about 2007, slumped dramatically thereafter, and I suspect that a lot of players in the building sector went out of business or left the sector and went elsewhere, and the capacity shrunk quite dramatically. But we just haven't had that sort of return of serious growth in buildings completed. And then we've had this abnormal stimulus, abnormally low interest rates, abnormal global stimulus across the board. So you have had a gradual rise in demand over the past 5 years or so for residential property, and yes, the supply of new stock just not keeping pace.
How do we make money over the next 5 years out of residential property, Herschel? Is it a time where you can go back to mid-2000 scenario where people were buying houses, renovating them and flipping them within 6 months and making a killing? Or is it one where we can do the buy-to-let market maybe coming back to life a little bit? Because so many people are being denied credit, they can afford rentals, the rental market is growing and growing quite substantially. Is it a buy-to-let market? Is that beginning to resume?
Absolutely, and that's why I'm not concerned about a bubble. I don't think we're seeing this irrational exuberance from our buyers tripping over themselves. There is pent-up demand. There is greater demand than supply. But I think you're right, and I think what's happened now is that sort of flip speculative market is gone. the investment potential of property has returned to what it should have always been, of a capital nature on a long-term basis, and then there's a yield opportunity. And if you look now, as John said, very little new rental stock, very little new high-rise residential coming up, and so the rental escalations relative to property price growth is still slightly higher, and so the yields in the buy-to-let market are becoming more attractive, and once again, depending at what level, but up to sort of that 1.5 to 2 million rand investment, those yields are also probably approaching a double figures, and that's
really.
That's
I mean, so you can get you can get what, a 10% yield on a 1.3 million rand apartment, 2-bed flat within decent reach of within a metropolitan area, certainly.
Absolutely.
Yeah. And those returns are pretty good, pretty solid, John. I mean, to make an investment case for it, that's investable.
Well, yeah, I suspect that the yields may still rise a little bit more as interest rates rise, which should be a bit more supportive of the rental market and, well, in my view, a little less supportive of price growth. So the best buy-to-let opportunity may not quite be with us yet, but certainly since 2000, and I think the yields, according to our calculations, were at their most compressed around about 2007 or thereabouts. It has improved somewhat since then, yeah.
So the property market is looking rosy, Herschel Jawitz. You're looking less strained and less stressed than, say, 2 years ago when things were a lot tougher.
Yeah, I'm cautiously optimistic, and so I would be. And listen, the anomaly is this: if you look elsewhere in the economy, new car sales, retail, consumer confidence, all of those indicators are all heading in the wrong direction, and yet we have this demand, and I think people are saying we've been waiting in the wings. The buying opportunities are now, if we wait, interest rates may go up, property prices are certainly moving, and the affordability situation or unaffordability is only going to worsen. So there are still buying opportunities, and I think we're going to see that demand continuing for some time, even if at a slightly slower pace.
There we go. Nice optimistic views on the property market in South Africa. Lots of foreigners are interested, but they tend to be at the upper end of the property market, but still investment opportunities abound. John Loos, household and property sector strategist at FNB. We'll call him this evening Captain Conservative, and Captain Bullish rather, is Herschel Jawitz, the Chief Executive of Jawitz Properties. Thank you for watching. There'll be more tonight, tomorrow. Bye-bye.